All right, ladies and gentlemen, I hope you had a wonderful weekend. I got another watch list for you, and the stock market is gonna get worse this week. But I say that with a word of caution. Why? On Friday, here's our pretty picture. You had the most amount of puts bought in history. Literally, no other chart. Like, this is going back to 1999, 2000. No other time than that Friday, literally a couple days ago, have this amount of puts bought in the millions of contracts ever been purchased. So, obviously, there was a little bit of fear. We came into the lows. We did not hit a new low, but we did come to that low area of the year. But why I'm saying we got to be cautious, because if you look at those two other points, there was one other time we hit this in June 29th. That was the other previous record. And then you go back to January 21st, 2022. So take a look now at the chart, and you'll notice anytime the put activity has ever been this high, the market would like kind of fumble around, bigger wicks, but then ultimately bounce. So we got a lot to talk about. We have volatility coming up. There's a lot we got to be looking at, and depending on where we go, literally right now in the early session, the pound is already down 1%, meaning the dollar is going to strengthen. So a lot of people are on edge from last Friday, but the question is now, what low do we set? Do we finally set it? But we're probably going to experience some volatility. So we got a lot to talk about. I got a breakdown of what to expect this week, the main events, a little bit about the levels, and then I got a couple of plays for you. I got a brand new one. I think you're going to like it. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. I still don't know what I'm doing with the hands, but we'll see you there. Free 99. And today is Sunday. Tomorrow is Monday. We need your help. This is the random account generator. And what we ask is you post a random option trade. Keep it below $100, preferably with time. And we are going to do a random comment picker in the morning, and we are going to buy it. So help us out. We've been doing kind of good, but there's literally no puts in the portfolio. It's all been gold or calls, but then like puts on the dollar, calls on gold, and we've talked about that a little bit. So let's go, Chad. Bring the plays, baby, and run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, I want you to understand one thing about this week. We are coming off of peak volatility, about to enter it. We had that little dance there near the lows, so things aren't over, things are developing. But in the meantime, I don't want you to underestimate how the market can operate until the next set of bigger catalysts, because we shouldn't have too many this week. So I'm gonna start with another pretty picture here, and this is why the next couple of weeks and even getting into next year are so important. But now being at these lows, remember we talked about the S&P trading X amount of days below its 200-day moving average. Well, here is a chart where you can visualize it a little differently, but that dotted line, which we just surpassed, the point is usually right afterwards, markets have slipped anywhere from 30 to 40%. And as you see, the number of days trading below that level, it starts to become exponential. So point is, we're going to have a lot of volatility, but the fact that everyone's buying puts, it's not going to be straight down. And now this week, we have quite the interesting lineup. So the first key and the first real event all week, you are going to be getting a bunch of Fed speakers. It's like Fed Evans, twice, I believe, Fed Bullard. You're going to hear from Bostic and then someone else. I think Collins. I think they're one of the more newer members, so we'll see, but we're going to hear from them. They may be able to drive things, but again, the fact that the dollar, the pound, the yen, if you didn't watch Friday's video, that's what you got to be watching, or make sure you saw it. But fact of the matter is, what's going on overseas, the currencies, and how it's kind of wreaking havoc on everything else, that is going to be the main key. But we will also be getting the PCE. That's the Fed's favorite inflation indicator, so that might be able to move things. But considering where we're at, I'm not too too sure, so we're definitely going to keep our eyes out for it this week. But other than that, watch the pound, watch the euro, watch the yen. If we keep getting more global actions and things go crazy, I mean, pretty much that is what's going to be the driving factor. Remember, on Friday, we had that crazy bounce at the morning. What is going to determine whether or not we have a gap up or gap down is if markets are panicking over anything in Japan, but especially now the pound being down again and again the euro. And then on top of it, there's another big like Italian election going on, and that may move the futures coming into the morning. But all of it really depends on what's overseas. We don't have too much data, but the market is sensitive, so we're going to see how we respond to it. But now coming into the next key and really to understand this week, just don't forget on Fridays, we had a giant wick. We came into the lows, but we did not breach the yearly low just yet. So until we set a new low, I think it's going to operate a little bit weird. And if you saw how last week traded, we are going to have to deal with that volatility around the levels. We're getting into no man's land, and that's the weird part, is that if we do break below any of these levels now, it's starting to be pretty much, it's up to anybody. I mean, there's no real levels that are set unless we go back 2-3 years ago. So you got to keep that in mind. But one big thing a lot of people are looking at, even if they're talking rally, bounce, anything, we want to see where that new low is set, and that will pretty much create a new level. And that's where now some of this uncertainty is going to creep in this week. But keep your eyes out for that. But coming into the final key, and it kind of echoes what I'm saying here, but we're pretty much going to deal with the same week as last week, unless something changes for the better, or unless that options activity that I showed you, unless that comes in the way. But essentially, watch out for more lows. And like we were saying last week, you can watch the market go up in the process of going down. So I want you to watch this level 351. It's one that I have in mind until we get a midterm bounce. And we talked about that on stream, and people are going to talk about this. Yes, right now we're talking about where we're going to go with the lows, but watch out for the bounce. But a lot of people have their eyes on this end of October, early November bounce. So just keep that in mind. But until then, we need to see the lows. I think 351 is going to be a place to watch. And if the data here doesn't move anything, it's going to be all about overseas. And then where we go from there coming into October, because the month is always done. Always, almost done. But let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow. I did close a couple of plays on Friday. I got out of my Apple short, only made like $50, but remember, we were negative going after the relative strength. I closed out of Tesla with $400 net profit, so that went from loser to positive, then closed out of Google, but I am still holding a majority of the downside plays. So we still have the Yang, the EPV, I'm even in the EWG, but now even these short futures, I'm still in all of those. But one thing we talked about on Friday, I made a couple of these bigger future trades. We had a nice day trade, made like $500. Then I went down going for the call side. But come on stream and watch this. I might make a follow-up video on this, but one strategy this week I'm going to be going after is trying to maximize these puts, holding my downside until I take profits. But I am going to be looking for various calls throughout the week and day to be able to hedge it with futures. Pretty much shorting equities, holding futures to hedge. That is a game plan that we have been going over, but watch out for that. We'll go into some of the other plays, but starting with the first play now, I really like this one. This is a new one. We've brought it up very vaguely in the past, but now let's watch out for it. But you got to be careful. There's opportunities on both sides. FXB, and what this is an ETF related to the pound. So one, we were dealing with the euro. That actually came a little bit ahead of the pound, or at the same time. Remember, euro fell below parity. People are freaking out. It's still down there now. You don't call it football anymore. It's soccer. Ha ha ha. Wait, what's going on? But anyways, it started with the euro. Then you also had the yen. The yen has been collapsing, but on Friday, that tax plan from the UK, that is affecting the pound. Even the fact the pound is down another 1% now, and this might change by the time we wake up, but this is what you got to look out for. The whole idea is the pound is at a breaking point. And now people are saying, well, if the yen is already breaking out from levels, if the euro has fell below parity, maybe the pound is next. So this is how you're going to play it. FXB, it's at a danger zone. So pretty much it's already gone to the bottom. Like a lot of these days, it could probably have a little bit more downside, but if it rallies from here until the next move towards the end of the year, it could put you in a weird position. But watch out for them. If you're going to go for the play, that is up to you. But at the very least, we are going to be bringing this one up throughout the day. I am going to be looking at /6B FXB. That is the future of the pound, but FXB on the market, this is something we could either get potential plays or data, but I would be watching out for it, and depending on what happens to the pound this week, coming into next week, I think this might kind of emerge to be one of those plays like FXY, like you've seen. It came on the radar, you're seeing the moves, it'll break out here and there, but it is staying elevated, so just keep your eyes out for it. That is play number one. Then play number two, we brought this up all last week. I was actually proud to hear some of y'all hit it, baby. XLF, Morgan Stanley, Wells Fargo, all of the bank stocks, but specifically the ones now that are trading back to their lows, kind of what we saw earlier around May and June, like Wells Fargo. Again, XLF, you can see how the ETF is, but bank stocks, they're now at a breaking point. If they're trading any bank stock, trading at the previous prices, the lows, or trading towards the kind of more lower end, those are the one I'm going to be watching, and really all I want to see is, are they going to lead the way this week? Pretty much, if they're at these breaking points, will they lead and outpace the S&P like we saw? If so, there will be more plays, but at the very least, whether they lead the way or even bounce, I think this could be a good signal and just good overall industry to watch. So still holding. I'm in that Wells Fargo from a long time ago. I'm only down like $300, but it just highlights this is that breaking point. I held that one for a while, but that's what I'm saying. If they do break from here, could get juicy. Otherwise, just watch for them to kind of be something that could be either a bellwether or swing the market. Remember, on Friday, energy was a big outperformer on the downside, so just keep your eyes out for any of those distortions. But that's play number two, and play number three, baby. UNG and COP. These are related. UNG is natural gas. Conoco is an oil company, but quite simply, people were starting to whisper about it on Friday. I'm hearing it a little bit more coming into this week, but people are talking about this energy sell-off being a little bit overdone. So watch out for it this week, but the fact that we're dealing with volatility, I don't think oil or energy will bounce after Friday, especially if there is more volatility. But if we see that volatility kind of chill out or not get too crazy, or even then you see people start to acquire natural gas or any of these oil plays, premiums have came down. BP is the only play that is cheaper, and the PSX, but surprisingly, Conocos are still up 100, 200%, but it's better than 600 or 700%, and the same thing now with those UNGs. But if we do see people acquire them, I am going to start looking for them. We made a play on those Boyle last week, so I might be open to grabbing another one on UNG, or even grabbing some of the options or even shares on one of the oil companies, but it depends kind of with the volatility, so we will see. But those are the main plays. As far as everything else, like I said, here's what we're holding. I'm holding the futures short on the SPY, up $2,000 on that one. I had an MNQ come back to life. Then there's the EWGs, IYT, the Netflix, and then we're going to come back to that one, the SPY Butterfly as well too. These ones are moving down. This one is a crazy play. Remember, this one was free. If these find a way to go negative, and the way they can go negative is pretty much if we drop to the 350s like quickly, I will get more of these, believe it or not. But watch out for that one. Then the Yang still holding, and then I'm still holding Adobe. I'm down $1,000 unrealized, as well as ARC. That is the cold play, down 600, and then the UNG and Boyles, those are down about 1,000 a pop too. So we've taken a lot of profits. I got to realize them. Again, the day trades, we've closed most of the trades out, and you see I have downside plays that are really working. And like I told you, my plan is to pretty much hedge with some of the futures to the upside, hold those as insurance, profit on some of the pops, and then ride these out until I'm really thinking, okay, maybe we're going to get the bounce and then go from there. But that's all that I'm holding. But now I want to come to this Netflix play. Remember, we brought this up as the example last week, and I want you to see, just off the 10 shares, you only needed about $700 a margin to open this trade, but we are up 114, and then we were saying, just be careful of the options, and I want you to see, that means if we're up $114, the stock is lower than where it was when we shorted, but we brought up all of these premiums. I'm going through them now. If you looked on the money, in the money on Netflix on Friday, if you bought the weekly, even if you shorted at the same time we did, pretty much you didn't make any money. Now, obviously, that can change, and some of the ones with more time, they pretty much got back to break even, but here is that one contract. Again, if you made the same play and you only wanted to spend like $100 and you got a Netflix put with time, even with the stock lower, even with the S&P 500 going right into a new yearly low, that play would still be barely down while we are up on the other one. Again, you could go through the chain, you could even check check some of the weeklies. Again, the ones that expired were even worse, but just take a look at this other Netflix. This is for this week now. It would have been a next week contract, but even if you ended in the money on Friday with the stock $12 lower from when we made the trade and spent $800 on that contract, you would still be down like $100 on it. And again, the day before we even had it, you were down 50% the next day right away. So hopefully you've been seeing this, but all we've been trying to say is run through your options. All it is, like the main point we've been getting at, is just don't accept your first deal. Business 101. Someone says, hey, here's an offer. You should take that offer and shop it around. Before you go and buy an option with $100, say, well, what can I get with the credit spread? What's the max reward, max that it's capped at? What can I get with shares? What can I get if I get a future? Would it just make more sense to kind of wait? But the whole point is run through your alternatives and you could get a better deal, and don't get scammed in this market. And I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you gotta have trust with all of it. You have gotten this far. At this point, let your instincts guide you. Don't get too emotional. Trust that you have been prepared for it and ride it all the way through. And remember, little battles along the way, but you gotta keep yourself ready to go and keep the stamina for the end of the year. But it's game time, Chad. So I hope you're ready. Hope you're ready for another week. Don't let it get too crazy. Again, you are in control. Have trust in that. Amor fati, baby. We gotta ride, Chad. Let's do it. Let's get to the bottom of it. Hopefully it doesn't bottom too much, but it's your time. It is your moment. I love you. Drink that water. Stay hydrated. Stay healthy. And I'm going to see you in the morning. And God bless Chadadonia, baby. And bye. Okay, you ready? You like that? I don't know. I feel like Pal inspired this. I didn't even say anything about the outfit. I don't know. Pal and his little Fed says, I'm okay. I love you. You ready? Are you ready? I'm ready. Don't get too crazy. I got so much macro, 10, non-macro. Okay, bye.